Donald Trump's latest round of tariffs has officially taken effect after midnight Wednesday, creating ripples across global markets and raising concerns about international trade relations. These new measures impose a minimum 10% tax on nearly all of America's trading partners, with higher rates for countries running trade surpluses with the US. The impact on India is also coming in. India now faces a significant 26% tariff from the US, a concerning development, considering that the US accounts for approximately 18% of India's total goods exports, 6.22% of imports, 10.73% of bilateral trade. Several Indian export sectors will feel the immediate impact of these additional duties, including shrimp, carpet, medical devices, and gold jewelry. The Indian pharmaceutical industry has already experienced a 1.7% drop in stock values following Trump's earlier indications of potential major tariffs on pharmaceutical imports. Let's talk about China. China faces the most severe tariffs at a whopping 104%. In a strong worded post on Truth Social, Trump declared if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, the United States will impose additional tariffs on China of 50%. China has announced retaliatory measures, pledging to levy its own 34% tariff on all US goods starting Thursday. Trump, however, appears confident about China's eventual capitulation, writing, "China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their call. It'll happen." The tariff implementation has triggered significant market reactions. Major Asian stock indexes have declined. Oil prices have dropped to their lowest level in more than 4 years. Both of India's major stock indices, the BSE Sensex and NSE Nifty, recorded declines in early trading. In response to these economic pressures, the Reserve Bank of India's Monetary Policy Committee has cut repo rates by 25 basis points to 6% in its first meeting of the 25-26 financial year. RBI Governor Sanjay Malhotra has announced a shift in stance from neutral to accommodative and projected real GDP growth for this year at 6.5%, CPI inflation for the same period at 4%. India is also reportedly considering adjustments to some import quality rules that the US has identified as non-tariff barriers. The potential policy shift could involve reviewing India's quality control orders, which require both domestic and foreign manufacturers to meet standards set by the Bureau of Indian Standards. Major companies are already adapting to the new tariff landscape. According to the Wall Street Journal, Apple plans to increase iPhone shipments from India to the US to mitigate the high costs associated with China tariffs. This represents a short-term solution while Apple seeks a potential exemption from these duties. Canada has responded with a 25% levy on US auto imports that don't comply with the 2020 US-Mexico-Canada agreement. Meanwhile, Trump's expanded steel and aluminium tariffs, which took effect in March, now tax both metals at 25% across the board.